Hey everybody, this is John and welcome to the free video. So let's take a look at the NASDAQ initially. So it's Tuesday the 7th. We had a big day. Of course, it's just been, a big week here, but a big day on Monday. And then on Tuesday, things kind of petered out. So the question is, is it all done? What do we do? And keep in mind that, there's more than this current market is way, way, way more than just what's going on in the Qs. All right. So at the very least, you could look for a pullback to the 8 EMA, which you've seen that in a strong market, the 8 EMA can hold. We're a good solid 5 points, 4.5 points away from that. All right. So that does imply some pullbacks in the NASDAQ as well as some of the bigger stocks. But the other thing here to keep in mind is that TLT, which is the ETF that's a representation of the bond market, is also poised to break out here. So if we get a situation here where bonds break out, that typically will also accentuate moves to the downside on stocks. So what's my point here? My point here is that we've got a lot of stocks here: Tesla, Amazon, Facebook, Netflix, Shopify, Spotify, the list goes on, that have had some incredible gains. I would be very, very cautious in this type of a market where we are right now of loading up on out of the money calls. Okay. Why? Well, we're very extended. We're starting to slow down a little bit. And even if these markets are really strong, it would make sense for them to consolidate for a couple of days. Now, if they consolidate for a couple of days and you own out of the money calls, then those things are going to die a very slow, well, actually a very fast, painful death. On the other hand, if you sell put credit spreads, well, I get it. They're not as exciting. But in this kind of environment, that's where you can make the money. Now, we all know that Tesla or whatever stock you're trading could just go down. And in either case, in that situation, you're going to lose money. But the main point is that if it trades sideways, okay, if you've got an out of the money call and the stock moves sideways, you're going to lose your money. But if it trades sideways and you got a put credit spread, you'll still make the same amount of money as if it had rallied. So the selling those put credit spreads, again, while not as exciting, will give you the edge you need to succeed this week and next with monthly expiration approaching. Okay? All right, you guys have a good one, and we'll see you at the next update.